We are now looking at solution for admission of partner. Question 1, friends. First question, read the question what is given. Gopal and Govind are partners sharing profits and losses in the ratio 60:40. Balance sheet on 31st March 16 is given. Due to financial difficulties, they have decided to admit Guru as partner in firm from 1/4/16 on following terms. Guru will be paid 40% of the profits. Guru's share, new partner's share in profit is 40%. Guru will bring in cash 1 lakh as capital. It is agreed that goodwill of the firm will be valued at 2 years purchase of 3 years normal profits of the firm, and Guru will bring in cash his share of goodwill. It was also decided that partners will not withdraw their share of goodwill rather, nor will goodwill appear in books of account. It anyways does not appear in books of account. Now profit for previous 3 years are given. After profits, you are given, it was decided to revalue assets and liabilities on 31st March 16. Revised value of assets and liabilities are given. New profit sharing ratio after admission of Guru is given. You are supposed to pass journal entries, show goodwill calculation, prepare revaluation, partners capital and balance sheet on 1/4/16 after admission of Guru, correct? So we are starting with calculation of goodwill, because even for passing journal entries, we will require calculation of goodwill. So friends, you can see we are preparing journal, cash and bank, that is a working, revaluation is being asked, partners capital account is being asked, balance sheet of new firm is being asked. So we'll start with our first working, that is for calculation of goodwill. Now we all know goodwill is to be calculated with the help of normal profit, sir. Calculation of goodwill should not include any non-recurring items. So non-recurring items should be excluded from profits given. See, we are given profits for 3 years. We are given profit for first 2013-14. So profit of 2013-14 is 20,000. Now this profit of 2013-14 includes insurance claim received. Is insurance claim received every year? Is it a recurring item? No, sir. If it is included in our profit, we need to exclude it for calculation of goodwill. So from this 20,000, we would be deducting insurance claim received of 40,000. So our profit will be actually getting converted into a loss of 20,000. Correct, sir. Then profit of 2014-15. Profit of 2014-15 is 80,000 negative. Loss of 80,000 is given. And this profit of 14-15 is including voluntary retirement compensation paid. This voluntary retirement compensation paid is an expense, but a non-recurring expense. Since again a non-recurring expense got included in our profit, we need to exclude it. Since this non-recurring expense is being deducted from our profit, so we will add back 1,10,000. So before this voluntary retirement compensation, our profit would be 30,000. Now for 2015-16. For 2015-16, profit is 1,05,000. And this profit of 1,05,000 includes profit of 25,000, which is profit on sale of asset. Profit on sale of asset is recurring or non-recurring? Do you sell your assets every year? No, sir. We sell our goods every year. So profit on sale of asset is again a non-recurring profit, should be excluded, should be deducted from our profit. So we'll deduct non-recurring profit of 25,000. 80,000 will be our adjusted profit. So can I now say total profit of 3 years is 90,000? Yes, sir. What would be average profit, friends? So our average profit would be 90,000 divided by 3, 30,000. And they are saying goodwill is 2 years purchase of this average profit of last 3 years. So firm's goodwill will be 30,000, that is your average profit, into 2 years purchase. So firm's goodwill comes to how much? 60,000, sir. Correct? Yes, sir. Now, what should be treatment for goodwill? Since we are doing this working, we need to also decide what should be treatment for goodwill. There are 3 partners, Gopal, Govind and Guru. What we are supposed to do, sir? We are supposed to raise full value of goodwill in their old profit sharing ratio. Full value of goodwill we got as, sir, full value of goodwill is 60,000. And what is their old ratio? Sir, 60:40. So we'll raise goodwill of 60,000 in the ratio 60:40. That is nothing but 3:2. And then we'll write off full value of goodwill in new profit sharing ratio. We'll write off full value of goodwill in new profit sharing ratio. New ratio is 35:25:40. So 60,000 will be divided into 35:65:40. 35:25:40. So 21,000 will be Gopal's share. 15,000 Govind's share. 24,000 will be Guru's share. So net treatment, Gopal's account should be credited with 9,000. Govind's account should be credited with 9,000. Gopal 15, Govind 9. And Guru should be made debtor with 24,000. Clear? Yes, sir. So now we'll start passing the journal entries. They are saying Guru will bring cash of 1 lakh as capital, and he will also bring his share of goodwill in cash. What is Guru's share of goodwill? Sir, it is 24,000. So how much cash will be brought in by Guru in business? Sir, Guru would be bringing cash of 1,24,000 in business. So first entry would be cash account debit 1,24,000 to Guru's capital. For goodwill now, what should be the entry? Sir, for goodwill, entry will be Guru's capital debit. Guru's capital account debit 24,000 to Gopal's capital 15,000 to Govins Capital. 9,000, sir. Correct. Being treatment for goodwill. Now, if we post both these entries in ledger accounts, since we are also supposed to prepare ledger accounts, if we post both these entries in ledger accounts, we are firstly given balance in their capital. Balance in their capital. Gopal's capital is showing balance of 1,20,000. Govind's capital is showing balance of 80,000. For cash brought by Guru, entry will be cash to Guru's capital, 1,24,000. For treatment of goodwill, entry is Guru's capital debit to Gopal's capital, 15,000. To Govind's capital, 9,000. So in Guru's capital it will be credited. Sorry, in Gopal and Govind's capital it will be credited as by Guru's capital. By Guru's capital, 15,000 and 9,000. Correct? Yes, sir. Now next entry we are supposed to pass is for revaluing assets. Fixed assets you can see is getting increased by 1 lakh. It was 3 lakh, it is now 4 lakh. Investments are reducing by 50,000. Their value is nil now. Current assets are reducing by 20,000. Loans and advances are increasing, or they are not changing at all. Loans and advances value remain same. So for revaluing assets, next entry, to increase value of fixed asset, entry would be fixed assets account debit. We are supposed to increase value of fixed asset by 1 lakh. So it should be shown on credit side of revaluation by fixed assets. Then to reduce value of other two assets, entry will be revaluation account debit we are supposed to reduce value of investments by 50,000. इन्वेस्टमेंट्स का वैल्यू 0 हो गया है तो पूरा 50,000 राइट ऑफ करना है. And then we are supposed to reduce current assets by 20,000. Revaluation to investments to current assets. So it will be debited to revaluation. It's to investments $50,000 to current assets $20,000. Correct? Yes, sir. So if we find balance in revaluation now, balance in revaluation we are getting is 1 lakh minus 70,000. Balance in revaluation now we are getting is 30,000. And that balance in revaluation will be distributed among both the partners. That is Gopal and Govind. So in which ratio? In their profit sharing ratio. Old ratio was 60:40, 3:2. So will be credited to partners' capital account by revaluation. Correct. Sir, are we supposed to pass an entry for this? Yes. Journal entry for distributing this revaluation profit will be revaluation account debit to partners' capital. Revaluation account debit to Gopal's capital account and to Govind's capital account. Correct? Yes, sir. After distributing revaluation profit, can we now find balance in their capital? See, in cash account opening balance was in cash account, cash in bank, there is no opening balance given. Can we say it is part of your current assets? These current assets given include cash in bank? Yes, sir. Then Guru brought 1,24,000 as capital. Guru brought 1,24,000 as capital. So we would now say closing balance of current assets will be 3,24,000. In new balance sheet will show current assets at 3,24,000. Correct? Yes, sir. Closing balance in their capitals. In Govind's capital. And in Guru's capital, 1 lakh is the balance remaining. So these capital balances will now appear in our balance sheet. Capital of Gopal 1,53,000. Govind, it is 1,01,000. And Guru, it was 1 lakh. So total capital 3,54,000, sir. Other liabilities will include long-term loan of 2 lakh. Current liabilities of 2,50,000. ₹8,04,000. Assets will include fixed assets of 4 lakh. Revised value of fixed asset is 4 lakh, sir. Investments won't appear in new balance sheet. Their value was nil. Current assets now are of 1,80,000. Loans and advances are of 1 lakh. Sorry, current assets are not of 1,80,000. Current assets are of 3,24,000, sir. Loans and advances. Current assets revised value we need to write here 1,80,000. So new balance of current assets will be 3,04,000. And then loans and advances are of rupees 1 lakh. Total 8,04,000. Correct? Yes, sir. So you may pause and copy this example completely. Friends, question 2, admission of partner homework section, question 2, page 154. Dalal, Banerjee and Malik are partners in a firm sharing profits and losses in the ratio 2:2:1. Balance sheet on 31st March is given. Now in balance sheet there is a misprint, you need to rectify that. On asset side, add one more item. On asset side, add one more item. Trade receivables, 5,500. On asset side, it is not printed, you need to add it. Trade receivables are 5,500. Yes, sir. Now, after the balance sheet, they are saying partners have agreed to take Mr. Mistry as partner with effect from 1st April on following terms. Mistry shall bring 5,000 towards his capital. Value of inventory should be increased by 2,500 and furniture should be depreciated by 10%. Reserve for bad and doubtful debt should be provided at 10% of trade receivables. Value of land and building to be increased by 20%. Value of goodwill is fixed at 15,000. Now, whether new partner is bringing his share of goodwill or not bringing, that is not clarified. So we will always assume he is only bringing capital. He is not bringing any premium for goodwill. He is not bringing his share of goodwill in cash. General reserve will be transferred to partner's capital. That is obvious. New profit sharing ratio will be 5:5:3:2. Outstanding liabilities include 1,000 due to Mr. Sen, which has been paid by Mr. Dalal. Necessary entries were not made in books. So we are supposed to pass entry for this adjustment. What is asked? We are asked to prepare revaluation account and capital account of partners, correct? Yes, sir. So let's start, friends. To start with, capital balance is given. Capital balance is given. We'll start with opening balance of capital. Opening balance of capital in Dalal's account, it is 12,000. In Banerjee, it is 12,000. In Malik's account, it is 5,000. They are then saying Mistry will bring 5,000 towards his capital. Think of journal entry. If Mistry is bringing cash for capital, journal entry will be cash to Mistry's capital. Cash to Mistry's capital. So it will be credited to his capital account. Correct? Yes, sir. Value of inventory to be increased by 2,500. To increase value of inventory, entry should be inventory to revaluation. So we'll credit that to revaluation. They are saying furniture should be depreciated by 10%. Furniture is 6,500 in balance sheet. We need to reduce its value by 10%. So entry will be revaluation account debit to furniture account, 650. Reserve for bad and doubtful debts should be provided at 10% of trade receivables. Trade receivables are 5,500. 10% of that will be 550. Entry will be revaluation account debit to reserve for doubtful debts. Revaluation account debit to reserve for doubtful debts, 550. Value of land and building to be enhanced, to be increased by 10%. Land and building is 25,000. 20% will be 5,000. Entry will be land and building to revaluation. Correct? Yes, sir. Then they are talking of goodwill. So let's firstly close revaluation. Profit in revaluation comes to 6,300, which will be distributed among partners. Will be distributed among partners in their old profit sharing ratio. Will be distributed between Dalal, Banerjee and Malik. Sir, what is their old ratio? Old ratio is 2:2:1. So 2520, 2520 and 1260 will be credited to their capital accounts. Now for treatment of goodwill. There are 4 partners, friends: Dalal, Banerjee, Malik, and Mistry. Now, firm's goodwill is 15,000. We need to firstly raise full value of goodwill in their old profit sharing ratio. Old ratio, sir, is 2:2:1. So 6,000, 6,000, and 3,000. And then we are supposed to write off full value of goodwill in their new ratio. $15,000 will be written off in the ratio 5:5:3:2. So it will be 5,000, 5,000, 3,000, and 2,000. So Dalal's capital will be credited with 1,000. Banerjee's capital will be credited with 1,000. No effect in Malik's capital, and Mistri's capital will be debited with 2,000. So the entry we get is Mistri's capital account debit to Dalal's capital to Banerjee's capital. So entry we need to pass for goodwill is Mistri's capital debit 2,000 to Dalal's capital to Banerjee's capital. So in Mistri's capital debit side, to Dalal's capital and to Banerjee's capital. In Mistri's capital, in Dalal and Banerjee's capital credit side by Mistri's capital. Correct? Yes, sir. Now last entry, friends. Last entry. They are saying outstanding liabilities include 1,000 due to Mr. Sen, which was now being paid by Mr. Dalal. Firm's liability will now be paid by a partner. If firm's liability is taken over, is now paid by partner, is agreed to be paid by partner, can we say firm's liability will reduce? So to reduce firm's liability should be debited. So outstanding liabilities account debit, and instead of outstanding liability, now we are liable towards partner to pay that amount. So Dalal's capital should be credited. Entry क्या बनेगा? Outstanding liability account debit to Dalal's capital. So will be credited to Dalal's capital. Rupees 1,000. Now find out closing balance in their capitals. If you are preparing balance sheet, in balance sheet outstanding liabilities will reduce by 1,000. Correct? Yes, sir. I hope both the accounts are clear to you. You may pause and copy. Friends, question 3, admission of partner. A, B and C are sharing profits and losses in the ratio 5:3:2. Calculate new profit sharing ratio and sacrificing ratio in each of the following alternate cases. if they are saying C acquires 1/10 share from B. See, there is no new partner getting admitted or a partner is retiring. Only their profit sharing ratio is changing. C is acquiring 1/10 share from B. That means B is sacrificing 1/10 share in favor of C. So sacrifice of B is clearly given. We are supposed to calculate their new ratio. What will be A's new share, friends? Sir, A's old share was 5/10. A has neither sacrificed nor he has gained. His new share will remain at 5/10 only. B's new share. Old share of partner B was 3/10, yes. B gave 1/10 share to C. So new share of B will be 2/10. C's new share is 2/10 and C receives 1/10 share from B. So C's new share will be 3/10. So we may say their new profit sharing ratio will be 5/10, 2/10 and 3/10. 5:2:3, correct? Yes, sir. Let's go to next case then. If C acquired 1/10 share equally from A and B are equally sacrificing 1/10 share in favor of C. So let's firstly calculate how much A and B are sacrificing. What will be A's sacrifice? They are in total sacrificing 1/10 equally. So we need to divide 1/10 into equal parts. A sacrifices 1/20th share. B also sacrifices 1/10 into half, 1/20th share. So 1/20th and 1/20th is their sacrifice. Sacrificing ratio will be 1:1. Yes, sir. Now, A's new share, friends. How much is A's old share? Sir, A's old share is 5/10, out of which he is giving 1/20th part to C. So A's new share will be 9/10, 9/20. B's new share. Old share of B was 3/10, sir, and he gives away 1/20th share. So 5/20 will be B's new share. C's new share. C's old share was 2/10 and he is now receiving 1/10 share from A and from B. So his new share is 3/10. We may now say their new profit sharing ratio 9/20 rather, 9/20 for A, 5/20 for B and 3/10, that means 6/20 for C. 9:5:6 is their new profit sharing ratio, correct? Yes, sir. Third case. C's share is increased by 1/10 share by acquiring from A. So they are only merely changing the language. C's share is increasing by 1/10 and that increase in C's share is being acquired from A. That means A is giving 1/10 share to C. C is gaining and A is sacrificing. Correct, sir. So friends, what will be A's new share then? A's old share is, sir, 5 by 10. He is giving away 1/10 share. So A's new share is 4 by 10. B's new share. How much is B's old share? 3 by 10. B is neither gaining nor sacrificing. His share will remain unchanged. C's new share. C's old share is 2 by 10 and he is getting 1/10 share. He is gaining 1/10 share from A. So we may say their new profit sharing ratio will be 4 by 10, 3 by 10 and 3 by 10. Correct? Yes, sir. Next case, friends. That is case D. Sorry. If C's share is increased by 3/10 and that 3/10 he is acquiring from B only. That entire 3/10 is he is acquiring from B. So A's new share. What was his old share? Sorry, his old share was 5 by 10. A's old share was 5 by 10. And A is neither sacrificing nor gaining. His new share will remain as 5 by 10. B's new share. What is B's old share? 3 by 10. How much is given by B to C? Sir, entire 3/10 part. So B no longer remains partner. C's new share. Two by 10 plus 3 by 10. So can we say new profit sharing ratio now of A and C is 5:5 or 1:1? Yes, sir. Case E. If A, B and C decide to share future profits and losses in the ratio of 5:2:3. So their new ratio is given. Old ratio we already know 5:3:2. New ratio is 5:2:3. We need to simply decide how much is sacrifice or gain. Now to calculate A's sacrifice, what will be A's sacrifice equal to? A's old share is 5 by 10. New share is also 5 by 10, sir. So A is neither sacrificing nor gaining. B's sacrifice. B's old share is 3 by 10. New share is 2 by 10. So B is sacrificing 1/10 part. Yes, sir. C's sacrifice. Old share of C 2 by 10 minus 3 by 10. So C actually is not sacrificing, but C is gaining 1/10 part. So B sacrifices 1/10 and C gains 1/10 part. Correct? Yes, sir. Case F. A, B, C now decide to share future profits and losses in the ratio 2:3:5. So again we are supposed to calculate their sacrifice or gain. How much will be A's sacrifice? Sir, A's old share is 5 by 10 and he sacrificed, his new share is 2 by 10. So we would say he sacrificed 3/10 part. B's sacrifice. B's old share is 3 by 10. New share also is 3 by 10. So he is neither sacrificing nor gaining. C's sacrifice. old share 2 by 10, new share 5 by 10. That means partner C is gaining 3/10 share in profit. Correct? Yes, sir. Case G, the new profit sharing ratio is 2:1:2. New profit sharing ratio is 2:1:2. So same way, what will be A's sacrifice? A's old share was 5 by 10, new share is 2 by 5. So A's sacrifice is 1/10. B's sacrifice. Old share was 3/10, new share is 1 by 5. B also sacrificed 1/10. C's sacrifice. Old share 2 by 10, new share 2 by 5. So C actually gained 2/10 part. Whatever is sacrifice of one partner will be gain for other partner. Yes, sir. A, B, C decide to share future profits and losses equally. So, how much will be A's sacrifice? A's old share is 5 by 10 and he sacrificed 1/3 part. 5 by 30. B's sacrifice 3 by 10 minus 1/3. B is actually gaining 1 by 30 part. C's sacrifice 2 by 10 minus 1/3. So C also gained 4 by 30 part. A is sacrificing, B and C both are gaining. Last case. If A, B and C decide that future profit sharing ratio between B and C shall be same as existing between A and B. We did a similar sum in classwork. What is profit sharing ratio of A, B and C? Sir, A, B and C are sharing in ratio 5:3:2. They are saying profit sharing ratio of B and C should be same as profit sharing ratio of A and B. So A and B's ratio is not to be changed. A and B in future also will continue to share in the ratio 5:3. We are only supposed to change ratio of B and C. Ratio of B and C should be made equal to ratio of A and B. So whose share actually are we supposed to change? From B and C, if you change B's share, it will result in changing ratio of A and B. So we can't change B's share. We will have to change only C's share here. खाली C का ही share change करना पड़ेगा ना. Now, we already know that B gets 60% of A's share. Sir, how 60%? B का शेयर कितना है? 3. जब A का शेयर कितना है? 5. तो 3 5 का 60% हुआ ना? यस सर. अगर B और C का रेशो भी सेम रखना है, इफ यू वांट टू कीप रेशो ऑफ B एंड C एज सेम एज A एंड B, तो C शुड गेट, therefore C should get 60% of B. That is, B का शेयर कितना है? 3, उसका 60%, 1.8. So new profit sharing ratio of A, B, C. A share will be 5, B share will be 3, C's share will be 1.8. We can't keep ratios in point decimals, so we need to multiply all numbers by 5. So 25 is to 15 is to 9 will be their new profit sharing ratio. Correct? Yes, sir. You may pause and copy all the examples.